We'll be going over the state and local income tax refund worksheet for IRS Schedule 1, Line 1. So if you have a tax refund of your state or local taxes, usually none of your refund is considered taxable if you didn't take a deduction, or like if you took the standard deduction, or if you took the state and local sales tax deduction instead of the income tax deduction. However, if you took a state and or local income tax deduction on a prior year tax return and then you received a tax refund, then you have to use either this worksheet or a similar worksheet located in IRS Publication 525 to determine if your refund is taxable. So most taxpayers will use this worksheet. However, there are 9 exceptions. So if you received a refund for the tax year other than the one that immediately preceded your current year, you should use the worksheet in IRS Publication 525. If you received a refund for a tax other than the income tax, for example, state sales tax, property tax, if you received one of those types of income or those tax refunds, then you can't use this worksheet. If your taxable income in prior year, but there was no tax in the current year because on line 16 because of the 0% tax that applies to capital gains and qualified dividends, then you can't use this worksheet. If your prior year state and local tax refund is larger than the state and local tax deduction minus the amount that you could have deducted as sales tax, then you can't use this worksheet. If your last estimated state or local income tax payment, if you made that most recent estimated tax payment within the current tax year, then you can't use this worksheet. If you owed AMT last year, or if you filed IRS Form 6251 and calculated that you had an AMT liability, you can't use this worksheet. If you couldn't use the full amount of credits that you were entitled to in the prior year because the credits were more than what you would have entered on line 16 as your or what would have appeared as your tax liability in line 16. If you could be claimed as a dependent on someone else's tax return. And finally, if you received a refund due to a jointly filed state or local tax return, but you're not filing a joint return with that same individual in the current year, then you have to use the worksheet that's in IRS Publication 525. So assuming that we still meet the criteria to use this worksheet, we're going to go through step by step, and we're going to get to the point where we determine whether or not part or some or any of your tax refund is considered taxable income. So the first thing that you'll do is you'll enter in line 1 the amount of this income tax refund. Typically, you would receive a Form 1099-G or a similar statement. However, don't enter more than the amount of the state and local income taxes shown on your Schedule A from the prior year. So in step 2, we're going to answer the question about whether or not the amount of total state-related taxes, so state and local income tax or sales tax, real estate tax, and personal property tax, is that more than the line 5E amount on Schedule A? So the line 5E amount basically asks you to take the smaller of either the line 5D or $10,000. In other words, question 2 is asking you whether or not the amount of taxes that you paid is more than what you're able to deduct on Schedule A. So if the answer is yes, then you would subtract that amount, the 5E amount, from the 5D amount. If not, then you would simply take the line 1 amount, carry it down to line 3, and then go to line 4. So let's just imagine that in this situation we have our hero John Doe. He answers no. He was within that $10,000 limitation. So we're not going to put an answer here in section 2. We're going to go down to section 3 and we're going to enter $5,000. And then we're going to enter the total itemized deductions from line 17 of the tax return. So let's just say that the total amount of itemized deductions was $30,000. Now, if you're married filing separately and your spouse itemized deductions in your prior year tax return, then you can skip all the way down here, enter the line 4 amount in line 8, and then go to line 5 or line 9, where you would then basically enter the same amount that you would enter the smaller of $5,000 or the $30,000 in here, and that would be the taxable part of your refund. So that would make it easier. But if you're married filing jointly, you still have to go through all of these, or if you're single, or if you're in any other tax status besides married filing separately. So we'll just assume that John Doe, our hero, is married filing jointly, and we're going to put in the amount for the prior year tax return. So obviously these will change from year to year, some of the dollar values, but most of the principles behind this do not. So as you're paying attention, just make sure that you're kind of following the process and using the correct year. So in line 6, you're going to check applicable boxes. So if you're 65 or older, if your spouse is 65 or older, or if either of you is blind, then you can add additional deductions. In this case, John Doe doesn't meet any of those criteria, so we're simply going to use that $25,100 as the amount right here. So now, is the line 7 amount less than the line 4 amount? So you would say, if it was no, then you're done. Just like you would be done up here if the line 1 amount was not more than the line 2 amount. Here, similarly, if the line 7 amount is less than $30,000, which we claimed in line 4, we have to subtract that. That gives us $4,900. And then we're going to enter the smaller of either this amount or the line 3 amount, which was $5,000. In this case, $4,900 of her $5,000 tax refund would be taxable. Now, let's imagine that we only took $25,000 of deductions. Now, let's say $28,000. So then now we're calculating the difference between $28,000 and this $25,100, and that's $2,900. And then that would be the amount of our taxable refund. So like I said, this is the worksheet that you would then use to calculate what goes on to Schedule 1, Line 1. In this situation of the 2022 tax return, obviously when the IRS updates this, for example, for the 2023 tax return, you would see all of these referring to 2022 filings. These numbers would change slightly based on the deductions allowed in 2022, but the principles are the same. You're checking different places in your previously filed tax return to make sure that you're calculating properly your taxable refund. And then again, you would put the taxable amount on Schedule 1, Line 1, which is a taxable state or local tax refund. That's all we have for this walkthrough, this worksheet. We do cover this in a little bit more detail as well as the rest of Schedule 1, not just Line 1, but the entire Schedule 1. You can go to our article, which is on our website. Simply go to teachmepersonalfinance.com, type in IRS Schedule 1, and you'll see the article that covers all of Schedule 1 embedded there. And we'll put links to the Schedule 1 article as well as articles that we've written about other tax forms that we've covered in this, such as the AMT tax form, IRS Form 6251. So if you like our articles, please subscribe to our newsletter. And if you like our YouTube videos, please subscribe to our YouTube channel. And as always, if you have any questions or comments, please post them in the comment section and let me know what you think. Thank you very much and have a great day.